Good morning, good afternoon, good evening to you all wherever you are around the world. My name is Anna Dawson and I will be the MC today. I have the pleasure of welcoming you to the OECD webinar on financial inclusion, financial consumer protection, and financial literacy in Asia and the Pacific. We have an interesting event planned for you today. Firstly, we will have the opening remarks. That will be followed by a presentation by the OECD highlighting a new report that is being launched today. And we are very fortunate to have speakers from 3 Asian countries who will give a presentation to share their insights. And finally, the webinar will conclude with a moderated discussion with the speakers, where they can also take questions from the audience. To facilitate this, we encourage you to please write any questions you have for any of the speakers throughout the event in the Q&A function on Zoom. I now have the pleasure of handing the floor to Mr. Yoshiki Takeuchi, who is the Deputy Secretary General of the OECD, and he will give the opening remarks for the webinar today. Thank you, DSG Takeuchi.
Well, thank you very much. Ladies and gentlemen, I'm delighted to open this OECD webinar on financial inclusion, financial consumer protection, and financial literacy in Asia and Pacific. Today, my colleague will present the findings from an insightful OECD report, which is also published today, on the impact of COVID-19 pandemic on financial consumers in Asia. I would like to thank the government of Japan, as the research and the publication would not have been possible without their financial support. This is a critical time for economies around the world. Policymakers' efforts to navigate a post-pandemic recovery have been further complicated by the impact of Russia's large-scale aggression against Ukraine. According to our estimates, global economic growth could be more than 1 percentage point lower this year than was projected before the conflict. At the same time, the global inflation, which was already high at the start of the year, could rise by about a further 2.5%, 5 percentage points. To continue to weather crises like the pandemic and the war in Ukraine, we must ensure that our recovery efforts focus on strengthening the resilience of our economies, our markets, and our consumers. This includes a focus on strengthening financial inclusion, financial consumer protection, and financial literacy. The COVID-19 pandemic has underscored the need to enhance consumers' preparedness against future shocks to support individuals' financial well-being. Application of digital technologies in financial services. This includes targeting the increased use of the application of digital technologies in financial services. The COVID-19 crisis accelerated and exaggerated the digitalization of our economies. Many consumers increasingly use digital financial services and transacted online, some for the first time. Others, however, were left behind due to their lack of digital skills and access. Some also fell victim to financial fraud and scams online, which grew significantly during the pandemic. These developments have further underlined the need for financial consumer protection and financial education policies to address the digital challenges for the consumers' financial well-being and resilience. The 2021 G20 OECD report on lessons learned and effective approaches to protect consumers and support financial inclusion in the context of COVID-19, and the G20 OECD INFE report on supporting financial resilience and transformation through the digital financial literacy offers some usual guidance in this respect. First, governments should ensure that consumers, and especially the most vulnerable, understand the benefits and the risks of digital financial services. It is also important to understand how to navigate an evolving financial landscape. Second, governments should deepen their capacity to rely on digital technologies for the delivery, not only for the financial services, but also to support financial inclusion. This is already happening in some jurisdictions, for example, via the delivery of their financial education messages and programs online or via other digital tools. Today, we are presenting a new report that highlights the wide range of measures that were implemented in Asia to support financial inclusion and protect financial consumers. This report focuses on the support for consumers in financial difficulty through measures related to credit and insurance products and services, and measures to support digital financial inclusion. The report presents the findings of a primary consumer data collection conducted in Cambodia, Indonesia, and Malaysia. It aims to enhance the understanding of the attitudes, behavior, and experiences of the financial consumers with regard to COVID-19 policy measures. Let me share some of the main messages from the report. The report found that the support measures implemented were used and appreciated by consumers and were important to support consumers' financial resilience and well-being. As public authorities start to phase out this support, they will need to carefully consider how to preserve consumers' financial resilience and well-being. Moreover, the report underscored the importance of financial consumer protection policies, and in particular, the importance of having in place effective and responsive arrangements for preventing hardships, tackling fraud and scams, and increasing trust in financial services. Finally, the report found out that financial literacy is associated with greater understanding of support measures. Reflecting on this, a lesson is that education and communication are essential to the effective implementation of public support measures. The considerations from this report are central to the OECD's work to support our members and partners in their efforts to develop and implement fit-for-purpose financial literacy and consumer protection policies. Later in the webinar, we will be fortunate to hear further insights from the representatives from Cambodia, Indonesia, and Malaysia. Against this background, it is important to develop financial consumer protection framework that are fit for the emerging challenges in the financial landscape and that can sustain consumers' financial resilience and well-being. In this respect, the G20 OECD Task Force on Financial Consumer Protection is currently reviewing and revising the G20 OECD high-level principles on financial consumer protection. These principles, which were first endorsed by G20 leaders and OECD members 10 years ago, are the primary international standard for effective financial consumer protection framework. They have been widely implemented by jurisdictions, including in the Asia-Pacific region. The review and the revision of the principles aim to ensure that they continue to reflect best practices are forward-looking in light of the market, technological, and policy developments over the past decade. Importantly, this review will also highlight the goal of financial well-being and the impacts of digitalization, sustainable finance, and COVID-19 policy lessons. Let me take this opportunity to thank the Indonesian G20 presidency and other colleagues here today for their ongoing support for this review. Colleagues, now more than ever, financial consumer protection and financial literacy policies are essential to support better lives. The OECD remains committed to advancing financial consumer protection and financial literacy for all. We look forward to continuing to work with you and support colleagues in the Asian Pacific region on these topics. With several excellent speakers from across the region, I am sure that we will hear and exchange many experiences today. Such exchanges and cooperations are essential to deliver better policies for financial consumers. With this in mind, I wish you an insightful and, of course, an enjoyable webinar. Thank you very much.
Thank you very much, Deputy Secretary General Takeuchi, for your inspiring and empowering remarks. They set the scene extremely well for the rest of the webinar today. And I now have the pleasure to introduce to you Ms. Chiara Montecone, who is a Senior Policy Analyst specialising in financial education at the OECD. Chiara will present to you the findings from the OECD research report published today, titled The Impact of the COVID-19 Pandemic on Financial Consumers in Asia. Chiara, the floor is yours.
Thank you, Anna, and good morning, good afternoon, good evening to all the participants in this webinar. So please let me share a few slides. So today I have the pleasure of presenting to you the results of the report on the impact of the COVID-19 pandemic on financial consumers in Asia, which is also available online. And I believe my colleagues will share the link to the report in the chat. So just by way of background, let me start by recalling that last year in 2021, the OECD published several reports looking and analyzing the COVID-19 policy responses in terms of financial consumer protection, financial education, and how they supported financial inclusion and financial resilience at an international level. And we also had a report specifically in Asia. But with this report today, we wanted to look at these aspects and these policy measures from a different angle, and especially focusing on the consumer's perspective, asking directly to consumers, how did they use and perceive these policy measures, how these measures affected and helped them to weather the crisis and to maintain their financial resilience during these difficult times, and also to look at how consumers' financial and digital skills may have helped them and may have affected the take-up of these measures. So this report is really based on a primary quantitative data collection that we carried out in 3 selected Asian countries, namely Cambodia, Indonesia, and Malaysia. The aim of the survey is really to explore the experiences, behaviors, attitudes of consumers in relation to policy measures. Of course, a wide range of policy measures have been put in place in many countries and also in these 3 ones, but we really focused on 3 areas that have been also the focus of a lot of policy efforts. That is to encourage these digital transactions, to allow people to continue make payments and transactions during lockdowns and during COVID-related restrictions. Then we also look at measures related to credit and loans and to support holders of such financial products. And last but not least, we also look at measures related to insurance. And finally, the report also looks at the role of digital and financial skills in using and understanding policy measures in this area. So let me anticipate the main findings of the report, which also serves to guide you through the rest of my presentation. So first of all, we will see that the pandemic has had a very strong negative impact on the financial situation and financial resilience of consumers. This is not new. Many studies have told us this, but this is again confirmed and corroborated by new evidence that is presented today. We also see that the support measures that I talked about around digital payments, credit, and insurance were indeed used to a very large extent, and they were greatly appreciated by consumers, and consumers really thought that they were extremely helpful in allowing them to maintain their financial resilience and well-being. However, we also see that certain factors limited the use and the ability of consumers to take advantage of these measures, and I will give you more details later on. And one of these factors is, of course, limited financial literacy, which was associated with greater awareness of the measures and a greater understanding of how they work and the greater ability to fully take advantage of them. So let me now go through the main results of the report. So in terms of the impact of the COVID-19 pandemic of the financial situation of consumers, we see that, here I'm really looking at the average of the results across the 3 countries that have been surveyed. We see that around 3/4 of consumers reported that the crisis had a large or small negative impact on their financial situation. And this, again, on average, is largely related to losses or reductions in wages and income and increases in expenses related to caring responsibilities and personal expenses. And this translated into a decrease or drawing down on household savings. The survey also looks more closely at financial resilience, and in particular, two aspects of financial resilience, which are the ability to face major unexpected expenses and the ability to cope with unexpected income losses. And the survey was asking the situation before the pandemic and how the situation has changed now, so at the time of the interview. So we see that the ability to face a major expense represented by the percentage of respondents who reported that they would be able to pay for a major expense without borrowing or asking family and friends to help with money, decreased by around 9 percentage points now with respect to before the pandemic, again, on average across the 3 countries. And we also see that the ability to have liquidity and savings to cover an income loss decreased now in 2022 at the time of interview with respect to 2019 and the situation before the pandemic. And of course, this negative impact was very large and very strong across the board, across the whole population, but some groups within the population have been particularly badly affected, and especially women, low-income people, and people living in rural areas. And of course, there are some differences across the 3 countries, but you can find those in the report. I will not go into the details now. So what did governments, public authorities, and other stakeholders do to help consumers face these difficulties? We know that many efforts have been put in place by public authorities, but also by financial service providers to help consumers in this situation. So let me just give you an overview of the main measures, and our speakers later on will have an opportunity to give you more details of what happened in each specific country. But in general terms, all of the countries devised ways of encouraging the use of digital transactions. This was done by promoting digital payments and other digital financial services, facilitating the entry of providers of such services, expanding the digitalization of government payments and benefits that were disbursed during the crisis, and also helping consumers, and particularly vulnerable ones, to access internet and digital technologies. At the same time, a lot of efforts have been put in place to ensure that consumers that had credit or that needed to access credit could do so, and that could maintain their credit worthiness. And this has been done to a large extent by restructuring the terms of repayments, either in terms of the loan period, the duration of the loans, or the interest rates. Many countries have introduced measures to defer loan repayments, and other similarly useful measures have been related to enhancing disclosure for borrowers, waiving fees and other charges, and allowing emergency access to additional credit. Insurance, of course, under the COVID situation has been another key pillar to allow consumers to maintain financial resilience. And many measures have been put in place to make sure that people could continue to access and maintain their insurance cover. Typically, most measures have been related to deferring insurance premium payments or making discounts or refunds on premium, but also enhanced disclosure and enhanced claim handling have been other typical measures that have been put in place. And last but not least, I should also mention that the provision of financial information and financial education has been key and extended and expanded during this period as a way to support and complement the policy measures that I mentioned before, to make sure consumers knew that these measures existed and how they worked, but also more generally to allow people to improve their budgeting and financial management skills in order to manage their finances under such unprecedented circumstances, and to promote higher levels of digital financial literacy in general. So just to give you a highlight of what have been the response of consumers in this respect, let's start by looking at the use of digital payments and transactions. So again, the survey asks about a number of such types of digital payments, such as sending money digitally to other people, or making digital payments for purchases, or paying bills digitally, or signing financial contracts online. And we see that in all of the countries, large share of consumers reported that they have increased the extent to which they are doing these kind of transactions digitally. And this is the case especially in Indonesia and Malaysia. And in terms of the other policy measures, we see that these have been used by very large shares of the populations. So on average, across the three countries, almost half of the adult population reported that they've used some form of credit support, and around 1/3 on average use some form of insurance support. So this really gives you the scale of how important these measures have been. But not only these have been used, but they have also been appreciated by consumers. So in terms of digital payments and transactions, the wide majority of consumers agreed, those who have used or have increased the extent of digital payments and transactions, to a very large extent, they agree that they have done so because for them, digital payments are faster, they are more flexible, and to a large extent, they were simply the only way to continue making payments and transactions during the pandemic. Consumers have also appreciated the measures on credit and insurance support. So here you can see that more than half of consumers, and even more in some countries, thought that these measures contributed to improving their financial situation, at least by a little bit. Many consumers, around 30% on average regarding the credit support, thought that these improved their financial situation a lot. So they were really useful way to maintain financial resilience in these difficult circumstances. And let's now focus on results about the credit support measures, where we had a few additional questions. So here you can see that not only consumers thought that these measures were useful in general, but around 80% on average, they thought it were easy to understand, and more than half of consumers thought that these measures works as they expected. So this is comforting. These measures seem to have worked and to be well understood. But at the same time, the results also show that there were small pockets, maybe not so small actually, but there were consistent pockets in the population that actually did not entirely understood how these measures were working. And it's quite worrying to see at the bottom of the slide that more than 1/3 on average, out of the consumers who used credit support measures, they thought that their loan would be canceled entirely, which was typically not the case in any of the measures that have been put in place. And so you will see later on in the results what has been the role of financial literacy in driving these results, but this is something to think about for the future. And as I anticipated, indeed, some factors also limited the extent to which consumers used and could benefit entirely from the support that was put in place. So starting from, again, the digital payments and transactions, the survey asked to those consumers that did not increase their digital payments, why it was the case. And a very large majority, around almost 3/4, said that they were concerned about fraud and scams, and more than half they were concerned about trusting such digital payments and transactions. So these remain causes of concern for many consumers in Asia. And slightly different picture appears when we look at the credit and insurance support measures. So here, most consumers didn't use, among those who didn't use the support measures, for most of them, it was simply because either they didn't have credit or insurance contracts in place, or they had them, but they simply didn't need help. So again, this is to some extent reassuring. However, we see that there are relatively smaller but still consistent groups in the population that reported that they were not aware of the measure or that they didn't know how to use them. And this will be related to some results about financial literacy later on in my presentation. So let's now turn to the digital and financial skills across consumers in the 3 countries that have been surveyed. So the financial literacy measure is based on selected a shorter version of the OECD INFA survey on financial literacy that looks at financial knowledge, behavior, and attitudes, but we had to reduce it to keep the length of the survey manageable, while the survey also looks into digital skills in terms of how easy it was for consumers to use basic digital technologies such as mobile phones, personal computers, or emails, or to make basic financial transactions using digital technologies such as using ATM or transferring money via mobile device and so on. So in all cases, we see that on average across the countries, either digital or financial skills are not very high. Of course, there is room for improvement in these countries, but we know that this is the case in most countries in the world. And this really had a relationship with how consumers used and perceived the policy measures that I have just described to you. So in this graph focuses on the credit support, and we see that not surprisingly, the credit support was mostly used by low financial literacy consumers, so this is not surprising. But we also see that low financial literacy consumers, they were typically more likely not to be aware of the measures or of reporting that they didn't know how these measures worked, and to somehow misunderstand how the measures worked, for instance, by indicating that they thought that loans would be cancelled entirely. And the last figure that I would like to show to you is also again related to the relationship between financial literacy and these policy measures or seeking for information. So as I mentioned before, many efforts have been deployed by governments and other public authorities, financial regulators, to step up their financial education efforts as a complement to the other measures that were put in place. However, from this graph, we see that many consumers actually did not look for financial information or advice during the pandemic. They were not doing this before, and they continued to not doing this during the pandemic, which is the dark blue bar at the bottom of the chart. However, in the red portion of the bars, this is the share of consumers that reported that they looked for information and advice to a greater extent during the pandemic. So those who responded to the incentives of becoming more informed and more educated and made efforts to do so. And interestingly, we see that this was the case for higher financial literacy consumers, but that low financial literacy consumers looked for information and advice to a smaller extent. And again, these were probably the people who needed it the most. So this also gives some hints of where the efforts of policymakers could go in terms of financial literacy and education. So let me now wrap up and summarize the main policy considerations that we can draw from these results. So the first one, of course, is related to the importance of collecting data, and especially this kind of data on consumers. This is essential for knowing to what extent policy measures are being used and are effective. This gives useful complementary information to just looking at the supply side of such measures. And interestingly, let me share with you that the OECD International Network for Financial Education is planning to conduct a financial literacy survey in 2022-2023. This is a repetition of previous surveys that have been conducted in the past. So this is a new wave that will focus on financial literacy, but also on financial resilience and well-being, and see how the picture has changed with respect to the previous surveys that took place in 2019. So this is a very timely moment to look at how the landscape, the financial literacy and financial resilience landscape has changed. So if any of you in the audience would like to have more information or participate in the survey, feel free to contact me or the INFA Secretariat. Another important message that emerges from the report is the fact that policy measures, and especially the ones on credit and insurance, have been extremely important for consumers in helping them to maintain their financial resilience and their financial well-being. But of course, we know that the COVID situation is evolving and that many of these measures are being phased out or reduced or modified, because of course they also imply very high budgetary implications. We all know this. However, considering the results of the report, the message is really to consider how to phase them out in ways that would not be too detrimental to consumers' resilience and financial well-being, because we have seen that they have been extremely important. And within the scope of these measures, we have also seen that the ability to put in place quick and flexible hardship arrangements to support financial consumers and to ensure long-term recovery has been a crucial aspect of these measures, and one of the aspects that made them successful and effective. And all of these aspects, all of these policy measures and the hardship arrangements, these are feeding into the revision of the G20 OECD high-level principles on financial consumer protections that is being conducted by the G20 OECD task force under Indonesia G20 presidency. So all the lessons that have been learned by the OECD, by policymakers around the world in this respect are not being lost, and they are feeding into the revision of these principles. And the last point is, of course, about financial education and communication. We have seen that they have been crucial to support the policy measures, and they have been important, especially considering that putting in place these measures has meant a coordinated and multi-stakeholder approach, bringing together policymakers, but also financial service providers and other stakeholders. So in this respect, effective communication and education have been key. And again, for anyone wanting to improve their efforts or programs in this respect, let me remind you that the OECD has a dedicated recommendation on financial literacy that provides a single policy instrument that brings together everything that the OECD INFA has learned in the last 10-15 years about how to do financial literacy policies and programs. And this is a great source of learning and inspiration for anyone wanting to approach this field. So I will stop here and I will give back the floor to our MC, but I will remain available and I will join the panel later on in case anyone has questions. So thank you very much for your attention, and don't hesitate to look at the report where you will find more detailed information. Thank you very much.
Thank you very much, Chiara, for your comprehensive and engaging presentation. You've certainly covered a lot of material very concisely in order to highlight the key findings of the OECD research. So thank you very much for your presentation. The link to the report is in the chat, the Zoom chat, and we'll also put other materials from the webinar on the event webpage after the event. So moving now to the next part of the webinar, we're very fortunate to hear insights from representatives from the 3 countries where the data was collected from consumers. I take this opportunity as well to remind you, if you have any questions for any of the speakers, including for Chiara on the OECD research, to please write them in the question and answer function. And I now have the pleasure to hand to Ms. Florian Messi for the next part of the webinar, which is presentations from our three panelists, followed by a moderated discussion. Florian Messi is the head of the Consumer Finance, Insurance and Pensions Division of the OECD, and she is also the Executive Secretary of the OECD International Network on Financial Education, which is known as the OECD INFI. Thank you, Florian. I hand the floor to you.
Thank you very much, Anna. Good morning, good afternoon, good evening, and I understand Ramadan Mubarak for those who are going through Ramadan at this point in time. It is really my pleasure to be participating in this webinar, and especially to be moderating this session with key policymakers and key countries that have been contributing to this research. A few points before I introduce them. Obviously, as highlighted by Chiara, this research has been very important, and I would like, of course, to thank the government of Japan for their continued support to our activities in Southeast Asia. So the research is really providing evidence from a consumer perspective to enable learnings and to reflect on what worked well and what could be improved to better support financial consumers in the futures. This research builds on the extensive research on this topic that the OECD has done via our network, our outreach, especially here in Asia, and also incorporates the findings from the session held at the OGK OECD conference in December 2022, and I had the pleasure to moderate a session at this point in time. We are very fortunate now today to have three esteemed, and I would say top-level speakers from the three countries that have been specifically surveyed through this research: Cambodia, Indonesia, and Malaysia, which will complement the research findings and they will add their insights and perspective. A range of measures were put in place by governments and financial service providers around the world to support consumers as they had to deal with the impact of job losses, reductions in income, the effect of lockdown, and access on financial services. The panelists will now give us an overview of how the COVID-19 pandemic has impacted the personal financial situation and financial resilience of financial consumers in their respective countries. They will explore the evolution of the range of financial consumer protection measures that were available in their jurisdictions over the pandemic period and offer the perspective on the findings in the OECD research and the policy measures and consumer experience in their jurisdiction. This reflection informed by consumer research is really critical to learn for the next crisis and to ensure that there is enhanced access, inclusion, and financial well-being moving forward. I would like, of course, to introduce the three panelists. You have to know that they will each have 10 minutes to share their insight on the experience of their countries. But I would like to encourage all of you, I see that we have more than 500 participants in the audience, to not hesitate to post some question in the chat. I see that some of you, the Q&A function, I should say, some of you have started doing that. And the question can go to our three panelists, but also to Chiara Monticone, which has presented the research right now. So let me introduce our three panelists. First, I'm very pleased to introduce Mr. Fraziali Ismail, who I understand I can call Fra, moving on. He's Assistant Governor at Bank Negara Malaysia. I understand he's been at the bank for quite some time and is quite an expert in managing crisis, as I understand that he was one of the main advisors during the Asian crisis back then. Then we have Mr. Tirta Segaha, member of the Board of Commissioner at OGK, and especially in charge of consumer education and protection at OGK. I have to say that Tirta also hosted actually the conference that we had in December last year. Is a member of the INFE, actually of the advisory board of the INFE, member of FinConnect, Task Force on Financial Consumer Protection. So no need to say that Tirta is very much involved in our activities in this area, and it's a pleasure to have him. Last but not least, Mr. Ang Bomakara, Deputy Director General of Banking Supervision at the Central Bank of Cambodia. I understand that on top of his function as Deputy Director, Ang is partially involved in financial inclusion, in MSME financing, and also on financial consumer protection in Cambodia. So certainly a really good expert for us in order to share the insights. So with no further ado, I'd like to give the floor first to Fra for its presentation. I understand that some of the speakers may use slides. So each of them, as I said, will have 10 minutes, and then we'll move to a Q&A session. So please prepare your questions. Obviously, as a moderator, I will have questions, and I'm sure that my panelists are ready. And with no further ado, I move to Fra first for his intervention.
Thank you, Flo Ann. May I have the slides up, please? Thanks. Let me start with thanking the OECD and the organizing team for bringing us together today. I'll go straight to the point. I'll share with you how COVID-19 has impacted the financial consumers in Malaysia and our experience with the assistance measures that we implemented. Let me start off with, actually who were the most affected and how were they affected? In essence, what we saw is that the financial consumers of different household income faced varying levels of hardships during the crisis. For instance, the lower income and the informal workers are the ones that suffered the most. They came into the crisis with pre-existing vulnerabilities, with conditions such as low financial buffer, with minimal or no savings, and since pre-COVID days, and they faced continued decline in household income during the pandemic, and to some extent continue to face challenges on that front. Now, there are also those of the lower income group who belong to the informal sectors, informal workers, and they lie outside the social protection network of the government. So to the extent that the government initiated help, they were somewhat excluded from the reach of this protection net. Low skilled sectors or in the hardest hit sectors, services sectors were hit the hardest. These sectors, of course, contain the greatest share of job at risk, where the low skilled workers face the possibilities of losing their jobs, whether temporarily or even permanently, especially given the fact that businesses decided to pivot their business model, the approach to doing business by approaching, for example, by adopting more digitalization and new way of working. So we've seen, for example, since 2019, there has been a steady decline in the demand for low skilled workers. So as of 2021, the demand for low-skilled workers is 5% lower since before the crisis. I should mention also that graduates also face the prospects of lower income over the longer term. Research has shown, for example, if you enter the job markets during a crisis, you face the specter of lower income throughout your careers. So they enter the job market at a depressed salary. So it was observed, for example, that graduates entering the job market face a median salary that was lower by around 10% in 2020. There are, of course, longer-term consequences from the relief measures. And we are, after all, talking about a society where there's prevalence of low financial literacy, as highlighted by the excellent presentation by Chiara earlier on. Poor attitudes, some of them may choose the wrong form of assistance. For example, even though they might not need it, they still chose to opt into the repayment assistance program, resulting in more financial burden over the longer term. During the course of the crisis, given the scale of the crisis, we also allowed some borrowers, some of our society to tap retirement savings. And of course, this means that it needs to be replenished going forward. And there is, of course, big challenge given that we will soon become an aging nation. If I may move on to the next slide. Let me first explain our thinking going into the crisis. How do we approach in coming up with the measures that we introduced? Number one, we have a high degree of financial inclusion. And by that, a significant proportion of our population have access to credit, and the household indebtedness is quite high. And that, of course, has a huge bearing when the economy came into a lockdown, when people have to stay home, and where their income is affected. So in the phase one of the crisis, and in the early days, given that the economy came to a sudden halt with a nationwide lockdown, a broad-based repayment assistance in the form of blanket moratorium is implemented to provide a swift but temporary cash flow for those who are severely affected. what happened was, we offered an automatic blanket moratorium for households, and if they do not want this, they would need to opt out from the mechanism. Additionally, of course, the insurance industry also came and helped in the form of providing voluntary contributions to allow greater testing. In phase 2, as the situation improved, we removed the opt-out mechanism, and we come up with more targeted mechanisms where we come up with specific mechanisms, for example, to help those who lost their jobs, which is somewhat calibrated to the where the economy is heading. At one point, we were strict in targeting, and then as the crisis morphed into a relapse, where the lockdowns were reintroduced, we resorted to relaxing the eligibility criteria, and more came in and opt for this help mechanisms. And then now that we are seeing an improvement in the economy and things are returning to normalcy, the economy is becoming almost fully reopened. We realized that while most have returned to repaying their debt obligation, there are still some who continue to be affected, and they would need a different kind of intervention approach, where they would need a more prolonged form of financial assistance, with a lot of hand-holding and education. So for this, we introduced a more holistic package to help this small group of borrowers. Now, taking a step back, looking at all this, there's a few conclusions. Number one, we saw that this has provided a great relief to most households and businesses. It really certainly has helped them. And second, the fact that most of these loans are not foreclosed, so this allows them to continue to use, for example, the assets purchased, which not only helps their livelihoods but also help the economy to recover faster. I mean, after all, instead of foreclosing businesses, business can take a breather and continue to operate. And of course, all this, importantly, is made possible because the banks, the financial institutions, the insurance and takaful operators are sound and are able to roll out this given their strong capital and liquidity positions. If I move on, of course, given the large scale of this banking and help mechanisms, it is the largest in our history, involving a very high degree of our borrowers, a high proportion of our borrowers. It's unprecedented. There are bound to be some risks in terms of conduct issues or conduct risk itself. We can see here, for example, there are issues in terms of that we saw in terms of unfair debt recovery and loan restructuring practices. We saw, for example, there were information gaps and some lack of understanding in terms of what's on offer, as presented by Chiara earlier. And then we also, given that the way it's rolled out, sometimes it's we have a very quick turnaround time. There's somewhat poor communication and complaint resolution on the part of the lenders. So what we have done is to quickly come in and help crank up the communication and hand in hand with the banks to deal with each of these problems. For example, in terms of providing more fair and transparent practices in computing the cost of borrowing, by providing more handholding in terms of financial advisories, be it through because we were limited and because there is still lockdown, so people have to resort to, for example, appointments if they want to engage their banks, or doing it mainly online. So all these needs to be rolled out pretty quickly. So finally, if I may touch in the next slide, in terms of some reflections and lessons for us in terms of how we want to do this going forward. Number one, I think it's imperative that the measures that we introduce must be fit for purposes, and it must go hand in hand with what's happening in the economy. We must be nimble enough to adjust the mechanisms, to roll out, to gradually remove them, and to tinker with what's necessary. And this is important, especially if you want to nudge responsible behavior on the part of the consumer. Second, I think the golden rule, it's always, we joke among ourselves, we call it 3 C's or 3 E's. It's just comms, or engage. There is no way that we can do this unless we really engage with the respective stakeholders. Precisely, we need to talk to the banks because after all, they are the ones who need to roll it out. We need to talk to the consumers, to, for example, also the consumer rights groups, stakeholders, the politicians, the various parties. And we need to communicate in plain language. In this day and age where social media is, the most convenient platform, there needs to be an appreciation in terms of what's there. Of course, there's a high degree of noise there. People were stressed whenever we roll something out. Sometimes people are angry. So it's and at the same time, we also use that opportunity to identify what are the pain points that needs to be addressed quickly. So certainly, on our part, we need to be coordinated in our approach. So what we've done is we take, for example, a whole bank approach here at the central bank to make sure that we are prompt in identifying and responding to emerging issues. But on the part of the bank themselves, we have what we call cross-functional war rooms, so that they are ready to really implement this and take the necessary measures to adjust, as we fly and face the public on these measures. Finally, on financial literacy, of course, we know it's super important, and more than ever, during these stress times where people need to make, instant financial decisions, and they need to make ones that are informed and fit for purpose. The challenge here is, people coming in and they're not in the mood, they're stressed, they are angry, they are responding to a lot of pressures, and here we are, sometimes having to explain compound interest and all those technical issues. They're just not in the mood for it. So the challenge here is, how do we break it down, these somewhat challenging financial issues, to the general public? But that also sets our resolve to really, improve the degree of financial education, and to make sure that, we can really implement this and people readily understand this during more peaceful times, rather than having to do it during stress conditions. So I think I'll pause here and I'll come back during the Q&A. I'll turn back the floor to you, Flor-Anne. Thank you.
Thank you very much, Fra. It was a really informative, comprehensive, and excellent presentation of the measures in Malaysia, and also the phasing out. And I really like your emphasis on engaging, and communicating the best you can with stakeholders, with the population, especially in times of crisis. It's probably been really instrumental in Malaysia. I'm now going to turn to Indonesia and Tirta but I want to remind again our participants not to hesitate to ask questions in the Q&A. I see that some are popping in, but do not be shy. Tirta, over to you now for the situation and highlights from Indonesia.
Thank you, Flor-Anne. First of all, allow me to thank the OECD for the opportunity given to me to share the Indonesia's perspective on the impact of COVID-19 on the personal financial situation and policy measures taken by the authorities. Next slide shows that how severe actually the impact of COVID-19 in Indonesia. We broadly agree with the findings of the research that the impact of COVID-19 has been deep in Indonesia, in many households, and as MSMEs experience financial difficulties. On the household finance side, 3 out of 4 households experiencing reduced income, and among those who switched job, 1 out of 2 formally employed moved to informal jobs, and 1 out of 2 have no savings to support themselves. So this is also one of the lessons learned. And 9 out of 10 family businesses were hard hit. On the MSMEs, 9 out of 10 MSMEs face lower demand for their products, definitely. And then 1 out of 3 face employee reduction. So they opted to reduce employees because they could not afford. And more than a half experience a decrease in asset values, and help needed, of course. And about 96% they need capital assistance, and more than 30% they need their loan be restructured. And the situation is worsened by massive investment scams and also illegal fintech P2P lending. And it is also one of the finding on the survey. And it's common that in the situations of financial difficulties, then there will be offers that pretend to provide help, but actually it's a scam. And the next slide, actually, responding such an adverse impact of the COVID-19, the government and the relevant authorities introduced some measures called the policy mix, including the areas of real sector, monetary, fiscal, as well as financial sector policies. And the policies taken could be divided in the two phases or periods. During the outbreak or survival period, and the second one is during the recovery period. Measures taken during the outbreaks are containment of virus spread, and then measures to mitigate social impact. And this is basically social transfer or social safety nets, and which is delivered in the digital mode. So we have also a lesson learned here. And then extraordinary measures for economic and financial stability, including support for MSMEs in the form of interest subsidy, guarantee scheme, which is basically financial insurance, partly to cover the raise on unpaid loan and working capital loan. Also, the loan restructuring and capital market stability. And during the recovery period, during the recovery period, a policy taken with massive and rapid vaccination, of course, continuing stimulus policy and boosting demand for economic recovery. Next slide just illustrates some measures introduced by Indonesia Financial Sector Authority or OJK. First is loan restructuring, which is really needed by consumers in banking and multi-finance. But this is based on the banks or financial institutions' assessment and decision. Borrowers could restructure their loans as long as they still have business prospects and without unreasonable or excessive cost. And we also agree with the OECD report and findings that the withdrawal of this measure must be considered very carefully. And indeed, considering that such measure is still needed during the recovery period, we indeed already extended the period of the restructuring until March and April next year for bank loans and multi-finance loan respectively. And we also introduced the capital market stabilization policy, including short selling ban, trading halt in the stock exchange, auto rejection, limit adjustment, and share buyback without requirement for general shareholders meeting. And also we reduced the loan to value ratios for residential and car loans. And the percentage of risk-weighted assets on loan for health sector was significantly cut. And then last but not least, the digitalization for MSMEs. Basically, we educate the MSMEs in order for them to be more familiar with the digital mode of transactions and also promoting MSMEs product to get on board to the marketplace so they can survive during the pandemic, and it will be easier for the government also to extend the targeted subsidy. Next slide. This is the detail of the loan restructuring program, actually. It is not just to maintain the borrower's credit worthiness, actually, but at the same time, indeed, it is also to maintain the book of financial institutions to remain sound, as their NPLs will remain low if the loan is restructured. And they don't need to accumulate or to create the reserve for loan losses then. So that will keep maintaining their book healthy or sound. And the schemes, with regard to the scheme, there are four schemes basically. First is lower the interest rate. And then the second one is extend repayment periods or prolonged periods. and then reducing arrears and topping up of the existing facilities, or a combination of the four schemes. And the treatment is, as I mentioned earlier, based on the banks or financial institution assessments and decisions to their borrowers. And there is also restrictions that only borrowers that are adversely affected by the COVID that can restructure the loan, and their status will remain current. And the table below is only the updates of the latest situation of the restructuring loan restructured. And we already restructured for almost 4 million borrowers this far. And then the next slide. This is the loan restructuring program about the challenges and lessons learned. First, there was a poor understanding of the procedure by the consumer. The consumers or the borrowers simply, they didn't know how to ask for the loan restructuring, and then they just came to OJK's office and asked OJK to restructure their loan, or asked OJK to discuss, to talk with the financial institution or the banks to restructure their loans. And then the second challenge is a misconception of the framework. Many consumers thought that the restructuring is a haircut. So the borrowers, finally, they don't want to pay the loan installment during the extension period, or they don't want to pay the interest actually. So if the loan is extended, they don't want to pay the interest, neither the installment. And then only loans that affected by COVID-19, so borrowers that affected by COVID-19. But actually, there are many borrowers that actually before the pandemic already have a problem with the loans, and they also ask the same treatment. So this is a challenge for us. And again, we also agree with the conclusion of findings by the OECD with the research that careful consideration for withdrawal of support measures is needed. And we have to pace them out smoothly to avoid the cliff effect. And the cut-off time, nevertheless, must be clear. In this case, we already announced the extension of the period of restructuring until March and April next year. The extension of the period is to make sure that we are in the recovery phase already and financial stability is maintained. And otherwise, it may create a moral hazard for both consumers and financial institutions. What is the lesson learned actually? The lesson learned first, it is important to educate people or consumers that we have to save in a good time and spend in the bad time, because simply, as I mentioned earlier, that the people are just not ready to face such a situation actually. And the second lesson learned, that the announcement time, the policy was announced actually very early actually, intended to calm down the consumers, but the result is in opposite actually. The result is actually the announcement create a panic instead. So the lesson learned is we should coordinate or talk to the industry first, communicate with the industry before announcing the measures to provide sufficient time for the market player to prepare the necessary administrative matters. Because once the loan is the measures was announced, and then suddenly many people just came to the industry's office, to the bank's office, and asked immediately their loan to be restructured. And then also misconception that restructuring is not a haircut, it is also a challenge. And we also found many disputes because the consumer misunderstood the framework. They simply do not willing to pay the interest, nor the rescheduled installments because of their wrong perception. The next slide, We also agree with the research finding that education and communications are essential for multi-stakeholders, and we have to switch from face-to-face to digital means or online because of the pandemic, because of the restrictions. So we conducted the financial education through online platform. We also empower the social media, public service advertising, radios, and also we use influencers, financial influencer. And we also strengthen the financial education policy. We revise our national strategy and then require the industry to hold financial education at least once a year. So we have more than 2,000 office here, and then we have more than 2,000 education a year. To include also the digitalization in the materials. And we also strengthening our financial education policy. And the result is we can conduct massive education programs, including the digitalizations with 9 million views. And also we use traditional media campaign and also social media. With regard to the data update used for the policy enhancement, we plan to conduct financial literacy and digital literacy inclusion survey this year with more than 14 respondents this year. And this is just telling that we also empower the task force on financial access acceleration and under the district government to create a new financial product because we need to against the loan shark. We need to combat the loan shark, and the result has been very productive, adopted by 65 districts for now, and it financed more than 200,000 borrowers, and the value is more than $164 million US. And for this scam, we empower the task force on investment or scam alert. They already closed almost 500 investment illegal entities, and illegal fintech almost 2,000 entities, and also illegal pawn shop. With this, I would like to end my presentation here. Again, thank you very much for your attention. Thank you.
Thank you very much, Tirta, for a very interesting and comprehensive presentation, also touching upon a very important group, MSMEs, obviously. And I like that you were very candid about, how to develop and implement policies in this difficult time of crisis. You mentioned that the timing, perhaps, of your announcements, which were really meant to reassure consumers, created panic with the industry, which is really something that is a learning from any experience with crisis, and when and how to inform the population and also the stakeholders that will be impacted by the measures. So I thought it was really good of you to be that candid, and in a sense also highlighting the importance of continuing to do research and collect data on consumer perspective, but obviously not forgetting about the industry and the fact that they need to be prepared also to implement the measure by the government. I will turn now to Cambodia and give the floor to Ang for his presentation before the Q&A session. Ang, the floor or the screen, shall I say, is all yours.
Thanks, Ms. Florence. Merci for your kind introduction. And good morning, good afternoon, and good evening to panelists, colleagues, ladies and gentlemen around the world. Today, I'm honored and privileged to be here to share my perspective toward financial inclusion, financial consumer protection, and financial literacy in ASEAN and the Pacific, which we all acknowledge that financial inclusion and financial literacies are crucial, fundamental in building a resilient economic development with financial stabilities, financial sustainability, and protecting the consumer's rights. Like other countries around the globe, Cambodia has also been impacted by COVID-19 pandemic. The COVID-19 has impacted the economy in various sectors, such as the decrease in production caused by the disruption of the supply chains. The tourism sectors has hit rock bottom and many businesses facing a decrease in the income. As a result, Cambodia economy growth, which had been around 7% for more than a decade, has been decreased to -3.1 in 2020. However, because of more than 90% of the population have been vaccinated, Cambodia has led to the reopening of the economy with strong immune societies. Therefore, in 2021, the economy has rebounded back to 3% and is expected to continue building in momentum in 2022 to around 5%. This impact has been affected to a livelihood of people and their financial situation, which their household income decreased while their expense increased. Nonetheless, Cambodia has thrived on this situation through the new ways of living with COVID-19. For instance, with the adoption of living with the COVID-19, the business operation and the usage of franchise service has been moved to digitalization, such as e-commerce has become more popular and common to Cambodian. For instance, the increasing an online business and mobile banking and e-wallet. As we have seen the data by the end of last year, there were 13.6 million users registered for e-wallet with 195 million transactions in the amount of 25 billion USD. Taking this, I would like to highlight that if we look back to the moment that when the COVID-19 existed, we see that people could not traveling that because of closing the country, lockdown the countries or particular areas. So in this case, people, it would be affect to the financial inclusion, but such as people cannot do credit or deposit. But one thing that we have been noticed is the payment. Payment means that people, they don't do credit or deposit, but they can do payment online, which is more supporting to the use of digitalization. Since this, I would like to highlight some part of what we have been done to promote and support the digitalization in Cambodia, as well as on the digitalized economy. In this case, the royal government of Cambodia has established a framework on Cambodia digital economy and society policies 21-2035 to set out the vision of building a vibrant digital economy and society, as well as to develop the inclusive digital payment system to ensure the availabilities, affordabilities, convenience, and qualities, ensuring the functioning and efficiencies of interoperabilities of product and service platforms and networks in the franchise sectors. Along with this, the National Bank of Cambodia has adopted retail payment systems to facilitate electronic payment interoperabilities among banking and franchise institutions. In 2020, the barcode system has been introduced to promote the use of local currencies and electronic payment in Cambodia on real-time basis, which improve interconnectedness and interoperabilities among different banking and franchise institutions and payment service providers. As end of 2021, there are more than 270,000 users and have conducted 5.7 million transactions through using barcode. With this achievement, the National Bank of Cambodia also received the 2021 Mickey Supervisor Product and Service Award for its and impacts on the country's economic and social development. At the same time, the adoption of the QR code payment, which is a standardized QR code in Cambodia, provide more convenience and a wider acceptance channel for users to make an electronic payment. The National Bank of Cambodia has been continually providing guidance on regulatory clarities and having a dialogue with the franchise services industry, including fintech and potential innovative use case, as well as technologies that could bring benefit to the whole sector. This is what we have done in promoting the digitalization because of the COVID-19. And that also because we moved to a digital economy. Taking this, I would like to highlight what we have been done to support the people who have been affected by the COVID. So in response to the COVID-19, the National Bank of Cambodia has issued various measures aiming at minimizing the impact on franchise consumers, as well as the banking system, while maintaining franchise stability, such as loan structuring. For the loan structuring, the institution, they can choose different ways to to deal with the customers, because we set ways of them, but they can choose anyway because they are the one who know the customer the best. We also reduce the rate of reserve requirement from 8% in domestic currencies and 12.5% to 7% only. We also allow bank and finance institutions to delay in maintaining capital conservation buffer with 50%, reducing the minimum interest rate on LPCO, liquidity providing collateral operation, as well as decreasing the interest rate on NCD, negotiable certificate of deposit. In addition to that, actually the NPC have been done so many work before the COVID-19 in protecting consumers, which in 2017, the NPC has issued the broadcast on resolution of consumer complaint, which require bank and financial institutions to have a framework to receive and solve consumer complaints. On top of that, the NPC also established a dedicated financial inclusion division, which also tackle on consumer complaint through hotline number and direct complaints. Furthermore, the National Bank of Cambodia has been promote financial literacy to different tools and channels. As we know that providing measures might not be enough, it is also important to build a resilience from the consumer themselves. So financial literacy play an important role. So I would like to highlight some part what we have done in promoting financial literacies to enhance financial stabilities in Cambodia. One is we conduct a seminar on microfinance sectors in Cambodia, aiming at sharing the history of microfinance development in Cambodia, explain the relevant legal framework and regulation, promote awareness on formal financial services provided, discussing the challenge of the microfinance in Cambodia. We also work with the Ministry of Education, Youth and Sport on financial literacy to embed financial literacy into the school curriculum from grade 1 to grade 12. And now we already complete the curriculum for grade 4 and grade 7. We also work with the Ministry of Women Affairs to promote financial inclusion through providing financial literacies to women and women entrepreneurs in local communities and improve entrepreneurship for female. This also in line with our national financial inclusion strategies, which to enhance women access to formal financial services, as well as to minimize women excluded from in the formal sector. Also, we're also working with stakeholders to enhance financial literacy that has taught many campaigns and the catalyze entrepreneur. Promote everybody to understand about the how they use their financial services, how they use their fund that get it from the financial institution, as well as to promote the cultures of saving. And last but not least, I would like to express my appreciation to the OECD team for the initiative in developing these surveys on the impact of COVID-19 pandemic of financial consumer in area. Which regard to the finding, I see that I don't have any comment, but I hope that my presentation could provide more input to the research. And I see that the research is very important. What is the data? Because without the data, the policies might not be developed effectively. So data is very important. So this research will provide the policies makers not only for the 3 countries, but also around the world to have a better view of the consumer protection, as well as the measures that have been taken during the COVID. And I also would like to raise one word that has been mentioned by Albert Einstein, that we learn from yesterday, live for today, and hope for tomorrow. And important thing is not to stop questioning. Thank you.
Merci beaucoup, Ong, if I may. Thank you very much. It was a very good presentation with an impressive, I would say, digital strategy on payment. A lot of work also being done to support consumers and MSMEs during COVID. You mentioned loan restructuration. And then I am also very impressed by the financial literacy actually and behavior, and especially the introduction of financial literacy in school. I can say that I'm French and I know how difficult it is to introduce financial literacy in school curricula. So well done on this. And also you mentioned the importance of data. I have to say that data and collecting evidence is very much in the OECD DNA. So we will continue to do that. And I'm glad if, of course, this research in particular is useful. Now, we've reached the time for the Q&A session. I'm looking at the clock and realizing we don't have so much time. I have a list of questions as moderator that I wanted to ask, but I also saw in this chat a number of questions. So I'd like to perhaps give priority to the audience. But first, there is a question, I think, for us OECD team. Yes, the documentation is available, and Anna has actually provided the link to the paper. Yes, you can have a look at the PowerPoint from Fra and Tirta. They will be available after the meeting on the web page of the event. Now, there were two questions from the Q&A that I would like to pick up because I think they will be actually useful for all of us. One is really stressing the fact that we've been speaking a lot considering the measures and the programs on the formal sector. What about the informal sector? I think it's also a question perhaps for us at the OECD. I'd like to see your reaction, Fra, Tirta, and on this. Has anything been done throughout the crisis for the informal sector that may have suffered actually even more from the COVID crisis? Any learning there for the future? Actually, I think that would be useful. And there is a second question, so I make sure you're ready and I'm not putting you on the spot. The second question is, have you learned anything from this research, or was it merely confirming things that you already knew was happening for consumers? So these two questions first, and I'm looking at the time. If there is more time, I will ask one question from my long list of questions after that. I don't know, who would like to start first on one of those questions or both of them? Up to you. Fra, I see that you unmute yourself, so
Hi,
means you want to go first.
Yeah, a quick one. I mean, in terms of, for example, what we learned from the survey, I must say it confirms what we've been looking at. Some of the points raised by the survey are precisely the kind of things that we monitor very carefully during the crisis. We often hold scrums and get together to check where we are, and these are precisely the kind of things that we explore. On the bit on informal workers, and some of you would know we have a large number of migrant workers here in Malaysia, and the very fact that and they work in the informal sector, and they also how would I say somewhat unregistered workers in the formal sector. So they are excluded from some of these measures of, and yet they are just like anyone else were also affected by the pandemic. So things like digitalization of the remittance processes and things like that, getting them to come forward and explain what they need, for example, really helps. The digitalization of the remittance process, for example, proved to be a lifeline, because after all, they have families to support back home. So how do they, remit money under current circumstances? And we saw a rapid pickup of the service by the migrant workers. So that certainly helped. Thanks.
Thank you very much, Rob. Tirta, do you want to?
Yes, thank you, Florent. With regard to the informal sector, this is very interesting. There were many findings also with us. First, that because their literacy rate is very low, financial literacy as well as the digital literacy rate is very low, and there are a lot of them were victim of the illegal peer-to-peer lendings. And although we continues to campaign, continues to educating them, but still they don't understand whether this is the legal or illegal peer-to-peer lending, because it is very easy to get money and from the peer-to-peer lending, and only with just one touch in their gadget or cell phone, they may get a loan from this institution. But there are many victims of the peer-to-peer lending, illegal one. And we finally, we also use the digital channel to educate them. So we use the Instagram. We also spread out all the informations to cell phones, social media, and just the message is simple. Simply ask our contact center with 3 digits contact center. It's OJK 157, OJK 157. And apparently there are not many people want to call us. And then we also introduced the WhatsApp. And the WhatsApp was really work. And during the pandemic and during the restructuring program introduced, our consumers not complain, not all of them not complain, but also questions increase more than 20 times that day. And one day is about more than 5,000 questions, and also yeah, some of them are complaints about whether this institution is legal or illegal. And then we have to tell them also that the legal one, we only supervise the legal one, and it is difficult for us to resolve the complaint for the illegal one, because we don't know the address, we don't know the management, we don't know whether this is in Indonesia or somewhere else, because the server could be in outside Indonesia, so it's difficult to trace back. So educate them must be also through the I will say that correct channel or the effective channel, which is if they want to if they like to see the social media, so we have to use the social media instead. That's what I would like to say for the informal sector.
Thank you very much, Jeta. It was a very comprehensive answer, and you also, of course, mentioned loan sharks, and also obviously a lot of scams here, and how to try and reaching out. I want to give the floor to Ang to see what would be the insight from Cambodia on those 2 questions, either of them or both of them, as you prefer.
Actually, one is I have not different from Tira. Actually, we only supervise the institution that under the supervision of the NBC. So the institution which is not licensed by the NBC, we also could not supervise them. So for in this case, it's not possible for NBC to protect all consumers who use informal financial services, because they are not the supervision of the NBC. So, but however, that is why we promote financial literacy to encourage them to use the formal financial services, which is provided by the licensed institution under the supervision of the authorities, so that they could be protected by that the measure that we have been taking. So in this case, we see that promoting financial literacy is important. Also linked to the lesson learned, that promoting the financial inclusion of financial literacy is important for people, not only the people who use financial services, but everybody, to understand the dangers of usage of informal financial services, as mentioned, like loan shark. So if they use that, they would not be protected by the authorities on that. In addition to the financial literacies, we also see that communication is important. What measures have been taken? The measure that we have been taken to make sure that the people understand what we have been done. If they don't understand what we have been done, then they may not consider on the measure that we have been taken in place, or they might confusing on the purpose of the measure that the NBC has been taking. On the other consumer protection, as mentioned by previously by Tiraj, I also would like to add that at the national in Cambodia, the NBC also implements similar method, which we have produced hotline. We have 5 hotlines at headquarters of the NBC, and each hotline at each province of the National Bank of Cambodia. In addition to that, the institution, as I mentioned, based on the podcast, the institution need to have their hotline particularly to receive the complaint from customers. Thank you.
Thank you very much, and for a comprehensive answer, and so also perhaps for mentioning last what is really key is to be reachable as easily as possible, especially for informal groups, but of course not only for them. We've already passed the time. I just want, in wrapping up this session and thanking you all, I would like to give each of you one last word. Well, the pandemic has been a crisis, and we have 2 years into that. I remember that in March 2 years ago at the OECD, we started closing down. So we are 2 years later in April, slowly going back to normal. It's been one of many crises, perhaps one that is a bit different from others. But my question to you in closing is, what would you have done differently? And perhaps when the next one hits, and it may be a different one, what would you do differently? What have you learned? And I'm giving you 30 seconds each, so that's not an easy one. Who would like to start up? Pra, I see you.
Yeah.
First goer, go.
Right. I think we meant well, and we are, very cognizant of the need to come up with help quickly and instantaneously. However, there are long-term repercussions. For example, once we started introducing a mass-scale loan moratoriums, people think that that's an avenue to always go for it whenever they are in trouble. So patients sometimes they need antibiotics, sometimes they need something else. So you can't use a generalized treatment for every ills that you have. Thanks.
Very good. And blanket covers sometimes measure are not the best. Tiata, go ahead.
For me, I would like to improve the digitalization rate first, and then encourage many people, encourage all people that they have to save during the good time because we can use it during the bad time. Simply because most of them they don't really ready to face such situation because they don't know when it's going to be ended. And then with the digitalization, we can communicate easier, everywhere, anytime, and very efficiently. And we can also touch millions of people with the digitalization, with the social medias, etc. So I will do with that. Thank you.
Thank you very much, Tiata. So long-term strategy on digitalization, and making sure that people have basic understanding of financial literacy. As you said, save in good time and spend in bad times. I think it's a very good one. Ang, a last word.
Last word, I think that we might not be able to prevent the world to fall into crisis every time. Nevertheless, I believe that the world will thrive on every obstacle, like we have already been done before and now, to absorb advantage of them as much as we can. As of today, I think every country has been done their best already, but based on the experience of pandemic and based on the measures that have been taken, I believe that we could make a better measures in the future. Thank you.
Thank you very much, Ang, and thank you very much, Tiata Ang, for your time. I know that these are busy times, so we really appreciate your insights, and I'm sure the research and the finding will be even enhance with that. Anna, if you allow me, I will just move on to quick concluding remarks because I'm really mindful of everybody's time. I promise that I'll be relatively brief. Obviously, you see the poll in front of you. As you know, at the OECD, we like evidence, as evidenced by the research, but also like the fact that we would like you, if you can, to fill in this quick evaluation poll in order to make sure that we keep improving the format of those webinars. Again, thanks very much to our speakers today for their time, for their candidness. I think it's very important that we hear from the region and from its policymakers. Thanks to DSG Takeyoshi, of course, for his opening remarks and from being there. I'd like to very much thank the government of Japan. The government of Japan is actually sponsoring our activity in Asia and the Pacific, the conference in December, but also this particular research. I'd like to thank the attendees. We had over 500 attendees most of the time and a lot of questions. I hope you find the webinar informative and that you have all the information that you need in the report and the PowerPoint. I also think that anyway, the webinar is being recorded and should be available at some point in time on the web. Speaking of digitalization, I'd like to thank very much the OECD team who has prepared the report and also organized the webinar, particularly Chiara, Miles, Anna, our MC today, Thomas and Valeria. Without them, there wouldn't be research or actually a meeting. A few main takeaways from this webinar, and I'll be very brief because a lot has been said, but there are a few important things that we've heard. Of course, the pandemic had a very negative impact on the financial situation and financial resilience of consumers, but also MSMEs. I think all of the speakers and panelists have really highlighted that micro entrepreneurs are an important part of the economy. We also heard that the informal sector is very important and that certainly groups to be looked at. We heard also about the need to support women in some cases. The support measures implemented by public authorities and financial services providers were used and actually appreciated by consumers, and most of the time understood, not always, but most of the time. Certain factors limited the use of the support measure by consumers, and financial literacy, it's an important finding, I think, from the research, is associated with greater understanding of the support measure. So moving forward, hoping, of course, that the next crisis is not coming too quickly, but we understand that, developing financial literacy strategy works. And in a sense, consumers that have higher level of financial literacy do understand better when new policy are put in place. And I think it's very important for us to keep that in mind. When developing and implementing financial literacy and consumer protection policies that aim to support consumers' long-term financial resilience and well-being under this evolving context, and especially this context of pandemic, a few high-level conclusions that also Chiara mentioned, but that were also actually picked up by our three panelists today. The collection of data, I think we've not stressed that enough, but I can say it again, it's really important that we have data coming from consumers as well. Quite often policies are being developed, but we don't necessarily know the impact or the perceptions on consumers. And it is really, really important that we continue doing that. This report has been doing that, and obviously at the OECD will continue doing so. Second, policy measures on credit and insurance were important to support consumers' financial resilience and well-being. And the phasing out is really important, but also important to think how to phase out in terms of timing and how to communicate about it in order not to cause further confusion or actually create difficulties for consumers and MSMEs. Quick and flexible hardship arrangement support financial resilience and long-term recovery, and it's been proven, and perhaps something to build in the policies in the future. And last but not least, of course, and I think our three speakers really mentioned that today, communicating, educating is essential. It needs to be done through a multi-stakeholders approach and a coordinated approach in order to make sure not to create extra confusion, but rather really to reassure consumers. Moving forward, these lessons and this topic actually have been incorporated into the review of the G20 OECD high-level principle on financial consumer protection. And I hear our MC is actually working as we speak on the finalization of those principles. And of course, the discussion today really also informed this revision. Second, we are in the process, and we've actually just finalized an update of the OECD INFE 2022 toolkit to measure financial literacy and financial inclusion. It is now available for policymakers and stakeholders, and we are encouraging all countries to participate in a new coordinated survey in 2022-2023. So I remind you, this toolkit is actually measuring the level of financial literacy and inclusion of the adult population, but it also integrates some measure of digital financial literacy, look also at financial resilience and also at financial well-being. So it's a very good way to get evidence for your own countries in terms of the level of financial literacy of the population, but also an understanding of financial resilience and of digital financial literacy after the COVID crisis. And it also enables you actually to compare yourself with other countries. With that, I would like to close the webinar again with big thanks to all of you for staying with us, and well, stay tuned. I hope to see you in person at some point in the near future. Thank you. and goodbye.
Thank
Thank
you.
you.
Thank you.
Thank you, everyone.
Florence.